Hi everyone, this is Alvin, the CEO of Dr. Wealth, and today I want to share about this stock called Berkshire Hathaway. It should be a familiar stock to all of you because that is the Warren Buffett company, the investing holding company that he have managed to build a very solid track record. And if you talk about the Berkshire Hathaway A shares, it actually hit and crossed the $500,000 per share mark, and probably it is the most expensive stock in the world. So is it still a good time to buy? And my take is that maybe you guys don't know, I've been sharing about Berkshire since the start of the year, and I still think that even after the recent correction, Berkshire Hathaway is still a very good inflation stock, and I don't think that this inflation probably is going away anytime soon. So Berkshire might be just on the cusp of even going to higher places from where it is right now, even though it has just broke the $500,000 mark. But of course, we are going to focus more on the Berkshire Hathaway B shares, which is a cheaper or a lower priced shares compared to the A share, right? Because the A share is usually out of reach for most investors. $500,000 a pop, or for just one share, it is something that is not very affordable. You can even actually buy properties with that kind of money. So let's go through why I think Berkshire Hathaway is still good inflation stock. And before I carry on, I just want to have a disclaimer, right? I'm not a financial advisor, so do not take anything that I said as financial advice. So please do your own thinking and decide for yourself, right, whether this investment is suitable for you. So let's begin. So this is what I meant when I said that the Berkshire share price was actually undergoing a correction. So in the past 1 month, the Berkshire Hathaway B shares have went down by 5% or 5.2% to be more precise. So for a stock to go down by 5% in a month is considered a very major movement, right? If you have not known by now, if a movement of about 1-2% is pretty normal, right? 5% is not normal, and it is consistent with the rest of the market because the US stock market has been going down for the past 1 month due to the fears of the interest rate going up, as well as a slowing economy due to China lockdown, as well as the war between Russia and Ukraine. So that is what has happened. And another bad news, right, when it comes to Berkshire Hathaway is that they also just released their first quarter results, and nothing looks amiss, right? If you take a look at the revenue, it has grown. You look at the rest of the investments, right, in terms of the specific insurance businesses, it has grown, right? The freight, railway, energy all have grown, right? The business, or at least maintain more or less the same it is. So it looks okay, but until you go down to the net earnings, you saw a 53% drop, and a lot of people will be like, oh man, is Berkshire okay? That's a very big drop. But remember, Berkshire is a special company. It doesn't just have operations that you run in its own businesses, but it also have a lot of investment in the stock market, and that is why the earnings can fluctuate a lot when the share prices move tremendously. So for example, you can see the corporate is over here, which is the investment and derivative contract. Sorry about that for carving the words. This is the investment portfolio changes, and you can see that last year they actually made a gain, but this quarter they actually make a loss. Okay, as I said, during especially the last 1 month, the stock market has not been doing well, and that impacts Berkshire Hathaway's investment portfolio too. So that is the loss that caused the earnings to go down by that much. So it is not a cash-based kind of loss. So to me, this is not a significant issue, right? If you really understand how to read financial statements, and due to the nature of Berkshire Hathaway's investment portfolio, it will be impacted by the market movement. So this is not something to be worried about. And if you look at Berkshire Hathaway, the track record is still good. If you take a more bird's eye view and stretch a longer horizon to look at their historical performance, the earnings per share for the past 5 years, the yearly gain was 32%, right? It's very fantastic, okay? And of course, this is also due to the good stock market, okay? So if the stock market can harm Berkshire's earnings, it can also help Berkshire's earnings. And that is what is causing the earnings in Berkshire Hathaway to be more volatile. So actually, earnings you have to stretch a longer period to really look at the impact, okay, rather than looking at a yearly kind of changes, because a year in the stock market is not a very long time, right? 5 years is still reasonable, but maybe 10 years, 20 years will be even better, right? But we stick with 5 years for now, okay? And if we look at the share price, they have grown 14% per year for the past 5 years, or up about 100% in past 5 years. So these are very good track record, if you ask me, okay? Very steady, may not be the best kind of stock performance, but is steadily going up, even as a lot of other high growth stocks have been whacked down 70%, 60%. Berkshire is still holding on pretty well. So that is the track record that we're talking about. And if we look at the Berkshire Hathaway's operations, the businesses are prime for inflation environment, as though that Warren Buffett and his team of investors were building the portfolio or the businesses for the scenario of an inflation period, and somehow it just tying together, right? So for example, we know that Berkshire has a very big insurance arm, Geico, as well as the rest of the insurance company, right? That forms the insurance group. It generates majority of the revenue for Berkshire, and that's about 27%, more than a quarter of Berkshire's revenue. And these insurance companies are going to prosper when interest rate goes up, right? Because their interest margins, all this goes up. The bond yields they're going to get is going to go up as well, right? So this is a good environment for insurance company, and Berkshire has a big part of it in their operations. And then the second one is manufacturing, and it contributes about a quarter of the revenue to Berkshire. All these are based on the 31st December 2021 numbers, okay? So the numbers may change as time goes by, but pretty stable, I would say. So the manufacturing arm of it, they are critical things, and they are likely to be able to pass down the rising costs in raw materials to their customers, right? So I don't see any issues with this. Okay, they may not prosper a lot during inflation period, but the ability to pass down means they can maintain their profitability, the margins. Okay, and then there's a 18% contribution from this McLean. This is like a supply chain logistics kind of company, and similar to the manufacturing arm, I do think that they are able to pass down that kind of cost to their customers if indeed the fuel costs are rising and all this that happens for the logistics side of the business, because all these are very necessary operations. And if you say that, okay, I don't have to pay the amount of price to McLean, then you don't get your stuff delivered, right? So it is an essential, and that makes them having the ability to raise prices if need to. And we talk about this BNSF railway. So in US, a lot of the commodities are being transported via the railway. Not so much of the passengers, but a lot of the commodities. And as commodity is booming now during the inflation period, the demand for this transportation goes up, as well as the ability for BNSF to increase the price. Okay, so that is again another good avenue of it. And Berkshire also have a 9% revenue contributed from its energy business, the oil and gas business, natural gas business. And without, it's for obvious reasons, they are going to benefit when all these commodity prices goes up. Oil prices have shot through the roof. It's over $100 per barrel at the time of this presentation. And lastly, they also have a service and retailing arm like Dairy Queen, See's Candy, and their automotive workshops. So that contributes in total 13% of revenue, right? So these companies are again essentials, services, and products for the customers. Okay, and they do have the ability to pass down the cost again, just like the manufacturing companies, right? Because of their branding, they are able to do that without hurting the demand when they raise the prices. Or you can say that they are resilient even in a rising cost environment. Okay, they may not prosper, but they are resilient, right? It's not that because of a recession or because of inflation, they stop eating candies and stop drinking milk from Dairy Queen or ice cream from Dairy Queen, right? So it is likely that a good part of the customers will still be retained, and that's why the resilience is there. So you can see that Berkshire Hathaway's operations are prime for inflation, so they're going to benefit from that new higher interest rate environment as well. Okay, so that is what it looks like. And Berkshire has another important part. Besides their own operations, they have very heavy investment in the stock market. And we know that Apple is their largest shareholding. And Apple, to me, is again a resilient business regardless of the economic condition, right? So if your iPhone is spoiled and you want to change a new phone, yes, there are considerations for Android phones which are cheaper, but if you're a die-hard Apple fan, which there are plenty out there, it's very likely you'll buy another iPhone, right? Or maybe another Mac because your Mac broke down, or another iPad because your iPad broke down. So that is how I think that Apple is able to continue to prosper, or at least be able to maintain their selling of all these products and services to their loyal fans. Right, so it should not be a big impact to Apple. And then they have financial companies as well, not just the insurance but the banks, which also benefit from high interest rate because their net interest margin will expand. Like Bank of America, we talk about US Bank Corp, Bank of New York Mellon. Okay, so all these are the banks, all right. And some consumer products again, Coca-Cola. All these are very resilient. Verizon, okay, and then some oil and gas company or commodities company, Chevron. Some of the Japanese distributors, right? The traders, commodity traders, okay, plus Mitsubishi, right? So you can see even their investment portfolio is very inflationary beneficial to these companies, right? So that, I don't know why these were being picked, okay? I don't think he came off with the idea that, oh, I want to hedge against inflation, I'm going to invest in all these companies that will benefit from inflation. I don't think that is the angle, right? Because he does look more long term than that. But it just happened that the stocks that he picked and the businesses that he have built over the years tend to benefit in an inflationary environment. All right. So not only that, they continue to build on this inflation theme. They bought recently the Alleghany, which is an insurance company, and they didn't buy expensive. At the PE of 11 times is about fair for an insurance company in the US. And moreover, it is operating like a mini Berkshire, the culture, right? So there is a very good cultural fit, and I just wondered why Berkshire didn't acquire Alleghany a lot earlier than before, right? Because it's almost a match made in heaven, right? And insurance, as I said, is going to benefit from rising rates, so it's also a very good addition at this point in time, and it's at a fair price. And this is more in the news. A lot of investors know about this, that Berkshire have been buying this Occidental Petroleum, which is an oil and gas company, and they continue to buy in May, right, the start of May, and it seems like they have not been accumulating enough, even though Occidental Petroleum is the most or the best performer in the S&P 500 companies among them. And so he still don't think that it's expensive. He's still piling in and buying more of this Occidental, and roughly there's about 14.6% stake right now, and it seems like he wants more of it, okay? And that means the investment portfolio that Berkshire is having would probably see more oil and gas companies coming up and increasing in terms of the percentage of the entire Berkshire stock portfolio. Okay, so all these again are beneficial during inflation period. And moreover, Berkshire has been doing share buybacks as well. That means they're using the company cash to buy back Berkshire's own shares, and thereby reducing the number of shares in the market, and each share value will go up in the process. And Buffett is very careful when it comes to share buyback. That means if you do a share buyback, the share price is appeared to be cheap. Okay, otherwise he won't be doing that. And he did mention that in his last year's shareholders letter. He did say that he didn't find any good ideas, but he did find Berkshire Hathaway being at a good price for them to do share buyback. And they did the most aggressive share buyback in 2021, and that was about 7 billion per quarter, right? You can see during this period. Okay, there's a missing quarter 4 over here in this chart, right? It's generally higher than the preceding years. Okay, and in 2022 they continue to do a share buyback. It's about 2 billion for the first quarter of 2022. Okay, it's less than half of what they used to do in 2021 because the share price has gone up quite considerably. So they actually slow down their buying, but they are still buying, which means Buffett believed that at this price, Berkshire Hathaway is still considered cheap. Alright, and so I did my sums and I used average PS, FCFU. I didn't use the earnings because it fluctuated a bit too much due to the mark-to-market kind of valuation due to the securities that they have, and market goes up, it pushes up the earnings, and market goes up, pushes down the earnings. So it's not as reliable, so I use the sales, which is the revenue, as well as the free cash flow to determine the fair price range, and I got around $319 to $365. Okay, so that is the fair price for Berkshire. And looking at the chart, this is where the correction came by. Right, this is the start of 2022, and that was where I started to be interested in Berkshire, right? And we probably were adding position during this period, even when the price went down to about $300, and then after that it rallied very well and nicely, right? Break new high. Then in the past 1 month, it went down together with the market. Okay, so at this point in time, it's around $327, which is within the fair price range that I'm talking about. It's in fact closer to the lower end of the fair price range. And if you know some technical indicators, this is the moving average, and it's like finding some support, and also drew this previous all-time high. Okay, it broke up and then it came back down, so it can serve as another additional support, and price is consolidating around that area. Okay, so you do have both FA and TA telling you that it looks like a good point of entry. Okay, it does look like a good point of entry, and I might be adding position to this Berkshire Hathaway. I don't think that the story is over yet, and I don't think the inflation issue is over yet. Okay, but this is just my opinion, right? Disclaimer, I'm not asking you to invest, okay? Make your own decision. And this is my summary, right? So I do think that Berkshire Hathaway is a very good inflation stock, and especially now, a lot of other sectors are not doing well, and indeed one has to be more selective in the kind of stocks that you want to buy. So some people don't like to buy, say, an oil and gas company because it is very cyclical. Yes, it might be enjoying the boom right now, but it will go down at some point in time, and people don't want to caught in that position. So Berkshire becomes a very good alternative to consider that, because Berkshire is more than just oil and gas. It's more than just commodities. You have consumer staples, consumer brands. It has very strong investment portfolios. You have banks and financial. It's well diversified, actually. Right, so it is a better stock for hedging inflation, if you ask me, than something like a very pure commodity play, which can be more speculative, which can be more volatile, right? And on top of that, you get to enjoy the long-term growth, because Berkshire's track record has been very fantastic in the past 50, 60 years, or even the past 10 years, right? So don't bet against Buffett, okay? The second thing is that the recent price and earnings declines are not an issue, okay? Because it is, first, the share price down was due to the poor stock market performance. The earnings decline is the same issue, right? Because Berkshire's investment portfolios, when they go down, they actually register a loss. Okay, so that is why I don't think this is an issue at all, because the rest of the fundamentals, the rest of the businesses, the revenues are actually going up, or at least maintaining. And the third point is that it's already trading a fair price range, right? As what I calculated using price to sales as well as price to free cash flow to determine a good range out of it. So at 327, the current price is in the fair price zone. And lastly, Berkshire is still doing buybacks, okay, even in the quarter one, right? So let me just go back to the chart. Okay, quarter one is within this period. So Berkshire has been buying $2 billion worth of share buyback. So which means that 327 is still a price that Berkshire or Buffett would be buying. So I think that, you know, this is indeed a lot of stars aligning, right? Whether is it from a fundamental analysis perspective, valuation perspective, a technical analysis perspective, or even an insider analysis, you will find that actually this price is a very good price, right? Even trend followers or momentum traders may even agree that from a technical perspective, the trend looks like it's a very good pullback and the rebound might happen, right? Of course, this is what we expect, but things can go the other way. That is also possible. That is the risk that we are talking about, right? But all in all, I do think that Berkshire Hathaway is at a very good juncture to be relooked again. Okay, it just came off a high, and it looks well supported at the price where it is, and all the share buybacks are ongoing, which would also give some support to the share price. So I hope you like the video. Remember to give me a thumbs up, and as well as subscribe to this channel so that you will not miss any other trade ideas like this, and hope to see you around. Goodbye. Cheers.